Hi, this is Devin Hobb with RE/MAX. I wanted to share my opinion on the question, is cash trash? Is it good to keep a bunch of cash in hand right now during this time where the whole world is crazy and nobody really understands what's going on with all the inflation and all that? So in theory, no. I mean, cash is not going to keep up with inflation. It hasn't been keeping up with inflation. Like gas is $4 now in Utah. And food and housing has gone up 30% in 1 year. So if the cash that you had saved was invested in a house, it would have done much better in homes. And I think it still will continue to do better in homes. So mathematically, no, cash in the bank is not a great asset. But you do need cash to float the unknown risks. And so a lot of investors are buying real estate in order to get their, borrow money at a fixed rate for 30 years. And so that is a hedge against inflation, because with inflation, homes go up because the cost of copper went up, the cost of steel went up, the cost of wood went up, so the cost of building goes up. And then when you're like Utah and you're 50,000 houses short for the people that are trying to be here, that's 5 years of building. We build about 13,000 homes a year in Utah. So we got 5 years of backup building demand. And when those costs of things go up, the sales prices of the homes go up. Now, what can bring all that down? Interest rates rise, all that stuff can come down. But it doesn't look like the Federal Reserve is going to be raising rates too quickly, because really the whole country's in too much debt as far as businesses, and we're so reliant on these low rates that they're probably not going to jack them up here overnight. So anyway, the point is, you want cash to hedge the risk. If you had 10 or 20 leveraged real estate properties and there was a slowdown where people, like COVID, couldn't go to work and not paying their rent, that can be a problem. You got to be able to float those mortgages. So where people lose in too much leveraging is when they can't afford to float mortgages when the renters miss their payments. So my personal strategy is I always try to keep between $6,000 and $10,000 per property. More money, the bigger the property, but basically I want to be able to cover the mortgage for at least 6 months. And so I put cash aside for those rentals, and that could either be used for missed mortgages or for repairs. But if you've got your emergency fund for yourself, 6 months of living, and you got 6 months of, emergency fund for your rental properties, more cash than that should probably be deployed into some sort of assets, real estate, gold, silver, or stocks, or whatever the case, Bitcoin, all this crypto stuff. So yeah, cash is good for the emergencies. It's good to solve your risk problem in whatever investments you've got, but much more than that, you don't want to be sitting on it. So that's my thoughts.